Let's start with the most basic question. What is the stock market? As the name suggests, it's where people go to buy or sell stocks in various companies. Pretty much every developed country in the world has a stock market, and in fact, even many developing countries have one. The stock markets of the world's biggest economies are actually made up of multiple stock exchanges. A stock exchange is the actual marketplace where trades happen. In the past, it was a physical location where traders would yell at each other and where every transaction happened on paper. Today, virtually all stock exchanges are electronic, and trading happens over the internet. This allows multiple exchanges to function as a single cohesive unit. That's why people can talk about the American stock market as one entity, when in fact it's made up of over a dozen different exchanges. Every day, millions of investors go to the stock market to buy or sell their stocks. The way actual trades happen is through order books. Now, every listed company has its own order book, and it's basically a collection of all the orders currently active for that company's stock on the market. If you want to buy shares of AT&T, for example, you make an order at one of the exchanges. You have to mention how many stocks you want to buy and at what price. Then, when you submit the order, it gets posted on the order book, where everyone else can see it and everyone can decide whether they want to trade with you for the given quantity at the given price. The order book is the collection of millions of such orders, and every second, the vast data centers of the Nasdaq or the New York Stock Exchange ensure that all the orders are active and are matched together whenever possible. That's why when you look at the price chart of a given stock, you'll see that it changes constantly. That's because people are buying and selling the stock all the time at different prices, depending on the supply and demand of orders in the order book at that particular moment. But how does one actually go about making an order to buy or sell stock? Well, to trade on a stock exchange, you need to be a member. Now, memberships cost a ton of money and have strict regulatory requirements, so individual investors can't actually become members. Instead, specialized companies spend the necessary time and money to become members and then offer their services to individual investors. These companies are what we call brokers, and if you want to trade in the stock market, you have to go through them. In the next video, we're going to learn what stockbrokers really are and why their services are valuable.